Hi everyone, Dan Hume from Inspired Energy here. We wanted to communicate an important update and some changes to the Climate Change Agreement scheme that may actually present an opportunity to some of the Make UK member base. If you're not aware already, Inspired support Make UK and the members through energy and carbon, and this change happened at the end of December last year. We knew we had to act pretty quickly to put something together to try and help you understand the opportunity that this may present for your business. Climate change agreements allow certain businesses to claim exemption from part of their energy bill. Specifically, it's the CCL line item or climate change levy. I'm going to start by explaining what CCL is before I cover how you may be able to claim the exemption. So what is climate change levy? It's an environmental tax that the government introduced back in 2001. It's applied to all non-domestic energy users as a separate line item on their invoices. Typically, you'll see this just above the VAT line on your energy supplier invoice. The idea of introducing this tax back in 2001 was to try and encourage businesses to look at reducing their energy consumption and therefore trying to reduce the overall amount of energy that they consume. CCL is charged as a fixed cost per kilowatt. So if you use less kilowatts, you can reduce your bill in CCL. The current rates, or should I say the rates from April this year for electricity for CCL are 0.775 pence per kilowatt, and for gas, just under half a penny a kilowatt. So it contributes, maybe 5–10% of your overall energy bill. So it can be a substantial cost. Now we'll look at a climate change agreement. So what is a climate change agreement? It's a voluntary agreement that you can opt into. And in return, you get CCL exemption. As I've explained what CCL is, that tax on your invoice. In return for joining the scheme, as it's voluntary rather than mandatory, you have to reduce your energy consumption or energy intensity, and therefore your CO2 emissions. The scheme is administered by the Environment Agency, part of government BEIS and HMRC. In order to qualify for CCL exemption, there are certain criteria that you have to meet. Typically, you have to have an energy intensive process. This is determined by the activities or processes you conduct on site and whether your closest aligned sector recognise them as energy intensive. There are actually 52 different sectors that have climate change agreements. The more traditional energy intensive sectors such as plastic, glass, cement, metals, food and drink, to the more abstract such as wallpaper manufacturing, surface engineering and pig farming. The CCA scheme has been running since 2001 and the current phase of the scheme ends in March 2025. Now the scheme has been closed for a while now for new entrants into the scheme. Therefore, people with eligible processors who haven't got a CCA haven't been able to apply for the discount. On the 17th of December 2021, there was a very sneaky announcement hidden within a BEIS consultation letter saying that the scheme would reopen but close again to new entrants at the end of March this year. That leaves us, from the time this recording's happening, about 2.5 months, maybe just under. So how can you benefit from joining the scheme? Well, arguably the biggest benefit is the CCL exemption that you can claim. Just to give an example, if you consume around 1 million kilowatts of electricity a year, so roughly 150 grand in old terms, this could be around £7,000 a year in exemption that you could claim. By joining the scheme, you monitor and track the energy and the carbon intensity of your processes. So you'll be set a target closely aligned to your nearest sector, and that target will track your kilowatt hours versus your throughput, and that could be a number of different measurements, whether it's linear meters, tonnage of throughput, number of parts manufactured, however's most aligned to the processes you conduct on site. Through the process, you'll review your energy consumed on site and try and identify ways to reduce that. So it's helping you, or almost forcing you, to identify energy and carbon reduction measures. And as part of the scheme, you have to report on a biannual basis at the end of each target period your intensity versus your throughput. So it's putting it on, I guess, board members' agenda that this is our carbon intensity versus a, for example, a unit of manufactured product or a linear meter, depending on how you measure that. What are your obligations by joining the scheme? Well, it is voluntary, but by joining the scheme, you have to continue to operate an eligible process at site. And we'll go on to how you apply for it in a little bit and qualify that. You have to complete your sector returns at the end of each target period to the most relevant trade federation or sector association that you've aligned to. The sector return is a form or a piece of paperwork that allows you to demonstrate how you've performed against the target you've set. If you don't achieve the target that's been set, in some cases there are buyouts available. So this is essentially a mechanism to allow you to offset the difference between your performance and the target you were set. For the current target period, which started in January 21 and ends in December 22, the price for carbon buyout is £18 a tonne. You must also maintain an evidence pack. Because you're claiming CCL exemption, tax exemption, you are open to audit, and this could be a desktop or a site audit. In the event of an audit, the Environment Agency may want to see a site layout highlighting where your eligible processes are. They may want to see what we refer to as a 70-30 assessment, defining that 70% of the energy consumed on site is through an eligible or directly associated process. That warrants you to claim the maximum amount of relief available. It would also include your sector returns from previous years, information about how you've set your baseline for your targets. And I appreciate all of this could be quite complex, but we can support and give more information if needed. Looking at how you apply for a climate change agreement, as I mentioned at the start, it's very time sensitive. The announcement for the scheme reopening came out on the 17th of December 21. The scheme closes again for new entrants on the 31st of March 22. So by the time you're probably hearing this recording, it's the end of January, start of February 22, leaving you a couple of months. The process that you've got to follow in order to apply for the scheme, first of all, you've got to define the site boundary to understand what you're responsible for at your potentially eligible site. You've then got to calculate the energy that's consumed by the eligible or directly associated processes, and then calculate the energy that's consumed in the non-eligible processes. So for a typical manufacturing site, these non-eligible processes would be offices, warehousing, things like that. You then apply the 70% rule. So providing 70% of the energy consumed on site is used through those eligible or directly associated processes, you can claim the maximum amount of relief. If you don't consume 70% or more through those processes, and it's actually a little bit less, you can still claim relief, it's just not the full amount. Once you've applied the 70% rule, you've then got to define your target and work with your most relevant trade, federation or sector to understand what your target's going to be and which sector you fall into and the umbrella agreement that you're going to apply through. And then you need to calculate your base year performance. So this is the line in the sand to measure your future performance against. Typically it's 2018 for the current target period that we're in. Appreciate there's a fair bit of information there that you need to compile in a very short time scale. That's why we wanted to get this communication out to you as soon as possible. Of course, Inspired can support. We have a levy exemption service that aims to help people with their application process. We can come out on site and do the 70-30 assessment, as I mentioned on the previous slide. We can define the boundaries, work with the trade federation, and do so for over 300 climate change agreements that we manage currently. Once your application is ready to submit, we submit that on your behalf, and then we can support you with the ongoing management of that scheme. So making sure your CCL exemptions are coming through correctly, we'll validate those. We'll provide you with performance reporting to make sure that you're online to hit your target that's set by the sector. And if unfortunately you're not online to hit your target, we can help you forecast what that cost might be, but also we can give advice on how to reduce consumption on site to try and bring that intensity target back in line with your performance in line with your target, should I say. As always, if anyone does want any more information, we've set up a dedicated inbox for Make UK members. That is makeuk@inspiredenergy.co.uk. That's monitored on a daily basis, so if anyone submits a question or a query through there, we'd be more than happy to pick that up and try and answer it, whether you're going to go for it yourself or whether you'd like a little bit of support and want a conversation with one of the team. Thanks for listening, and hopefully that's been of value and help you hopefully save some money on your energy bills.